Every month you pay your home insurance premium faithfully without missing a payment, and you feel protected. You feel like whatever happens, fire, flood, theft, disaster, you are covered. But thousands of homeowners discover every single year, at the worst possible moment, that their home insurance does not cover what they thought it covered. The claim gets rejected, or the payout is a fraction of the actual damage, and they are left holding a bill they cannot afford for a disaster they thought they were protected against. Today I am revealing 7 things your home insurance company will never proactively tell you, and the exact steps to make sure you are genuinely protected and not just paying for the feeling of protection. Welcome back to Broke No More, where we protect your money by telling you the financial truths that the industry hopes you never discover. Subscribe right now, because home insurance is one of those products most people pay for their entire lives without ever truly understanding what they are actually buying. This is the most widespread home insurance mistake in the world, and it affects millions of homeowners right now. Most people insure their home for what they paid for it or what it is currently worth on the market. Both of these numbers are completely wrong for insurance purposes. Home insurance should cover the rebuild cost, what it would actually cost to demolish the existing structure and rebuild it from scratch at today's construction prices. And in most markets, rebuild costs have risen dramatically over the last several years due to increased material and labor costs. Here's the dangerous gap this creates. You bought your home for $300,000 5 years ago. You insured it for $300,000. But the cost to rebuild it today is $420,000. If your home is completely destroyed, your insurance pays out $300,000. You are $120,000 short on a complete rebuild. This is called underinsurance, and studies consistently show that a significant percentage of homes worldwide are underinsured by 20% or more. The fix: contact your insurer and ask them to recalculate your rebuild cost at today's construction prices. Do this every single year at renewal, and look for a policy with index linking, which automatically adjusts your coverage amount with inflation every year. Pause right now. Do you know what your current home insurance covers you for? Is it based on rebuild cost or market value? Comment below. This one has financially devastated entire families, and the insurance company technically did nothing wrong because it was written clearly in the policy. The homeowner just never read it. Standard home insurance policies in most countries do not cover flood damage or earthquake damage. These are almost always listed as specific exclusions, meaning no matter how much damage they cause, your standard policy will not pay out a single dollar. And flooding does not just mean living near a river or coastline. Flooding from backed up drainage systems, flash flooding from extreme rainfall, and groundwater flooding can affect properties nowhere near traditional flood zones. The fix: look at your current policy right now and find the exclusions section. Check specifically for flood and earthquake. If they are excluded, and in most standard policies they are, contact your insurer about adding separate flood and earthquake coverage. Also check official government flood maps for your area. Properties in flood risk areas may require specialist flood insurance, and if you are buying a home, always check its flood risk status before purchasing. What natural disaster risk is most relevant to where you live? Comment below. I want to see the global range of answers. This is the counterintuitive home insurance truth that most people only discover after it is too late. When you make a claim on your home insurance, even a small one, 2 things happen. First, your premium almost always increases at the next renewal. Second, you lose your no-claims discount, a bonus that can reduce your premium by 20 to 40% for claim-free years. Here is what this looks like in real numbers. You have an $800 repair needed. You claim on your insurance. You get $800 minus your $250 excess, so you receive $550. But at your next renewal, your premium increases by $200 per year, and you lose a $150 no-claims discount. Over just 2 years, that small claim has cost you $350 more than you received. The rule most insurance professionals use privately: only claim for large, unavoidable losses. For anything you can realistically afford to pay it yourself and protect your no-claims discount. The fix: before making any claim, calculate the true cost. Take the payout amount, subtract your excess, then estimate the premium increase and no claims discount loss over the next 2 years. If the net result is negative, pay for the repair yourself. Have you ever made a small claim and regretted it? Comment yes or no below. Yes or no. Most standard home insurance contents policies have what is called a single item limit, the maximum they will pay out for any one item. This limit is typically $1,000 to $2,000 per item in standard policies, which sounds reasonable until you think about what you actually own. Your laptop, $1,500. Your camera equipment, $2,000. Your jewelry, $3,000. Your bicycle, $1,200. Your musical instrument, $2,500. If any of these items exceed your single item limit, your insurance will only pay out up to that limit regardless of the actual value. You lose the difference. And there is another issue many people miss completely. Standard home contents insurance typically only covers items inside the home. Your laptop that gets stolen from your car, not covered. Your camera that gets damaged while traveling, not covered. Your bicycle stolen from outside a shop, not covered. The fix has two parts. First, check the single item limit on your current policy and list every item you own that exceeds it. Add those items as specified name items on your policy, which increases your premium slightly but guarantees full coverage. Second, add personal possessions cover to your policy. This extends your contents insurance to cover items outside the home as well. Pause right now. Do you have any single item in your home worth more than $1,500? Comment what it is below. This secret has become critically important since remote working became mainstream worldwide. If you work from home, either as an employee or running your own business, and you have business equipment in your home, your standard home insurance almost certainly does not cover it. Business equipment, stock, client documents, professional tools, these are almost universally excluded from standard home contents policies. The insurer's reasoning is that business assets require commercial insurance, not domestic insurance. This means if your home is burgled and your work laptop, professional camera, stock inventory, or business equipment is stolen, your home insurance claim for those items will be rejected. The fix, but if you work from home, contact your insurer and ask specifically whether your home-based business equipment is covered. In most cases, it is not. You then have two options. Add a home business extension to your existing policy or take out a separate business equipment insurance policy. This is particularly important for content creators, freelancers, photographers, and anyone running an online business from home. Do you work from home? Comment yes or no. And I want to know if you knew this before watching this video. This one catches people completely off guard. And the timing, when you discover it, could not be worse. Most standard home insurance policies contain an unoccupied property clause. This means if your home is left empty for a continuous period, typically 30 to 60 days depending on the policy, your insurance cover is either significantly reduced or voided entirely. This affects people in more situations than you might think. Extended holidays or travel, hospital stays, temporarily moving in with a partner, renovations where you move out temporarily, working away from home for extended periods, or inheriting a property that sits empty while you decide what to do with it. During any period your home is classified as unoccupied. Damage from burst pipes, vandalism, theft, and certain weather events may simply not be covered. The fix: check your policy for the unoccupied property clause and note the time limit. If you are going to be away for longer than that period, inform your insurer in advance. Most insurers offer unoccupied property extensions or specialist unoccupied property insurance for these situations. Have you ever left your home empty for more than 30 days? Comment below. And did you know your insurance might not have covered you during that time? The final secret is the one that puts money directly back in your pocket, and you can act on it today. Home insurance companies rely on customer inertia, the fact that most people auto-renew their policy every year without shopping around, and they price their renewal offers accordingly. Knowing that loyal customers who do not shop around consistently pay more than new customers. Studies show that people who shop around for home insurance at each renewal save an average of 20 to 35% on their premium. On a $1,200 annual premium, that is $240 to $420 back in your pocket every single year. Here are the 5 fastest ways to reduce your home insurance premium right now. 1. Use a comparison website and get at least 3 competing quotes before every renewal. 2. Increase your voluntary excess. A higher excess means a lower premium. Just make sure your excess remains an amount you could realistically afford to pay. 3. Improve your home security. Deadlocks, window locks, alarm systems, and smart security cameras all reduce your premium. 4. Bundle your home and car insurance with the same provider and ask explicitly for the multi-policy discount. 5. Pay annually, not monthly. Monthly payments typically cost 10 to 15% more over a full year than paying the annual premium up front. Final challenge for this video: go to a comparison website right now and get 1 competing quote for your home insurance. Just 1. Then call your current insurer with that quote and ask if they can match it. Comment below. How much do you currently pay for home insurance per year? I want to see the range from different countries. So there they are, the 7 things your home insurance company will never proactively tell you. Secret 1. Insure for rebuild cost, not market value. Updated every year. Secret 2. Flood and earthquake are almost never included in standard policies. Check your exclusions. Secret 3. Small claims cost you more than they pay out. Only claim for large unavoidable losses. Secret 4. Check your single item limit and add named items plus personal possessions cover. Secret 5. If you work from home, your business equipment is almost certainly not covered. Add a business extension. Secret 6. Leaving your home empty for 30 or more days can void your coverage. Always inform your insurer. Secret 7. Shop around at every renewal. Compare quotes, negotiate, bundle. Pay annually. Save 20 to 35%. Your home is probably the most valuable thing you own. Make sure the insurance protecting it is actually doing its job. I have linked the best home insurance comparison tools and the books that help me understand how to protect my assets properly in the description below. If this video saved you from even one of these mistakes, subscribe right now. Every single week on Broke No More, we reveal the financial secrets that protect and grow your money. Comment below. Which of these 7 secrets surprised you the most? I read every single one. You are not broke forever. You are just one move away. This is Broke No More.